I know perhaps you've seen the news about the discontinuation of the sale of crude oil in Naira as prescribed in the PIA and implemented by this administration to boost the economy, ensure there is supply for local refineries, as well as reduce the pressure on FX, which we understand that contributes about 30–35% on the pressure on foreign exchange of the country that we always look for. So, but recently we got the news that that will be discontinued. In fact, the allegation was to the effect that the NNPCL are unilaterally discontinued. But they've responded that that's not the case, that that's because it's supposed to end in March. And Zach Adedeji, the FIRS boss, who is in charge of this subcommittee of all of this implementation, has also spoken to the effect that it has not ended, but there will be a review perhaps by the end of March. But this is based on demand, availability, and all the technical terms they use. But to break it down for us on what all of this means, maybe a background, and then we'll build up from there so that everybody is up to speed in terms of general frame of reference. Let's bring in an economist, an energy economist himself. Kelvin Emmanuel, he joins us from our Abuja studio. Mr. Emmanuel, good to see you, and thank you for coming on the program.
Good evening, Jeff. Thank you so much for having me on the show. It's a pleasure.
All right, Mr. Emmanuel, you're one of the big watchers of that space. For Nigerians who don't understand what is really playing out, because for us who are citizens and consumers, our prayer is that NNPCL should keep competing with Dangote Refinery and everybody competes, let the prices come down to where it was before the reform. That's our own prayer. But whatever is being played out right now, we do not understand perfectly. Maybe you can bring us up to speed as to what this is as far as the agreement for selling crude oil in Naira is, and whether those obligations have been met as it should be met, and what the implications are, and the response by the government.
Well, so basically, Dangote started the operations last year, January 2024, and between January and September 30th, 2024, 36 million barrels of crude oil was purchased. And then, there was a conversation on sections 109 of the PIA that says that NNPC and the markets in Nigeria, based on what they call the domestic crude supply obligations, crude oil feedstock from either production sharing contract or service contract, or because NNPC runs a service contract for what they call financial technical service agreements that it uses to do direct production upstream, where it brings in third-party contractors to, do its production. Then you have Mauritius joint ventures are obligated to supply the domestic market with a certain percentage of their output. And that is a precondition on which they will actually get export permits to lift the rest of their products or their feedstock out of Nigeria. It's enshrined in the law, in the PIA, sections 109 of the PIA. And it says basically that based on a willing buyer, willing seller basis, that crude oil feedstock can be offered in US dollar and Naira. So the government came together and set up like a technical subcommittee between the government and the private sector, not just Dangote, other players in the private sector. You have other refiners, you have Aradel, you have DuPont midstream in those states, you have Walter Smith in Imo State, to provide feedstock to these refineries, Dangote being the largest because he is a commercial refiner that is able to actually do premium motor spirit, AGO, Jet A1. Just 2 days ago, he started producing polymer from the isomerization unit that basically produce what they call polypropylene and polyethylene crystals that is used to produce plastics and other feedstocks for pharmaceutical manufacturing, And, from the time when this agreement came into force, which was October 2024 to date, 48 million barrels of crude was supplied. But then the question becomes, what percentage of that 48 million was supplied in Naira and what percentage was supplied in US dollar? Geoff, between January and September 2024, 36 million barrels was purchased in US dollar. Dangote purchased 36 million barrels of crude from both NNPC and the operators in US dollar at a premium. At a premium means that they didn't give him any discount. At a premium means that he paid in US dollars. And in fact, in some cases, there were even instances where the crude was actually given to third-party agents to sell to him with markup commission of as much as $3 to $5 per barrel. Right? Now, between October 2024 and March today, they've supplied 48 million barrels, but not more than 40% of that 48 million barrels was actually supplied in Naira. It's important to make this clarification so that Nigerians don't think that, oh, NNPC said in their press release that 84 million barrels of crude oil has been supplied to Dangote since January last year, and it was in Naira. That's a lie. That's untrue. Okay? So you have a situation basically where...
No, Calvin, just a moment. So let me read their statement. Under this arrangement, NNPC Limited has made over 48 million barrels of crude oil available to Dangote Refinery since October 2024. In aggregate, NNPC Limited has made over 84 million barrels of crude oil available to the refinery since its commencement of operation. Are you saying they are lying here?
That's why I'm trying to make a clarification. Between January and September 2024, Dangote purchased 36 million barrels of crude oil in US dollars. There's a difference here. Because if you're importing crude oil, you're importing in US dollar. And Dangote, in the past 2 months, has had to bring in more than 10 million barrels of crude oil to refine, because it's currently at 600,000 barrels processing capacity per day. Okay? So if the government set up a technical subcommittee and set up a Naira-based crude swap, and then it expects that based on that agreement, 385,000 barrels of the 445,000 barrels that makes up what they call the crude intervention stock is supplied to Dangote, being the largest commercial refiner in Nigeria that is able to distill PMS and produce other products like LPG and jet and diesel and all of that, and is able to supply the market. There are 600 million liters of throughputs in the refinery. And the actual situation is that not more than 110,000 of that 385,000 between October and January 2025 was actually supplied in Naira. The rest were supplied in US dollar. What's the point of the Naira-based crude swap? Considering the fact that he's now having to import crude oil into Nigeria and he's selling petrol in Naira without you having like forward contracts to hedge against the risk of currency fluctuation. Because when you buy your feedstock in dollars and sell in Naira, you have a risk of foreign exchange fluctuation that might make it difficult for you to
Calvin,
go back to the market.
If I may come in
the crude oil
here,
market is very volatile.
If I may come in here, whose fault is, maybe perhaps you say it's the NNPCL, but is it really the NNPCL, or is as a result of the commitment they've made already, or proper arrangements were not made? Whose fault is it here? Because why I'm asking that question, I would also like you to tell us the consequential impacts of what is playing out between them and in that sector.
Geoff, between 2019 and today, $14 billion has been staked in 4 wholesale agreements. Over 300 million barrels of crude oil has been signed in crude swaps for 4 wholesale agreements. The first one they took in 2019 was the loan they borrowed to make capital contribution for the government stakes in NLNG. The federal government of Nigeria, federal government, state, local government, as like a federating unit, they own 49% of NLNG, which is under what they call an incorporated joint venture company model. So they're obligated to contribute to shared FID for project financing. That was the first loan that was taken. The second one was the financing for turnaround maintenance of Port Harcourt and Warri refineries. Port Harcourt was billed at $1.5 billion. Warri was billed at $898 million. Then you had all kinds of vendor financing program for swap to bring in. You give out crude, and then you bring in PMS. They were importing anywhere around 1 billion liters per month, you know. Then you had, Project Gazelle come in 2023, early 2024, you know, where they staked 164 million barrels of crude in exchange for $3.4 billion at a strike price of $57 with an offshore debt service reserve account that is not under oversight of National Assembly, okay? And in my calculation, I saw that you can actually pay off that loan with interest of about 11.8% with just 45 to 48 million barrels, but 164 million barrels was pledged. So you have all these loans that has been structured, yeah, Project Leopard, Project Gazelle, Project Bison, Project Yield, you know, and to do all of this stuff, you know, then there's also the loan they structured where they collected money and stake crude oil to buy a stake in Dangote Refinery, which I think is the best investment the government has made, because for forever, they're going to continue to earn dividends on Dangote Refinery, which is an irony considering how much NNPC has antagonized the Dangote Refinery so far, you know? So when you run a model where NNPC is basically for selling all Nigeria's crude oil production, including future production, in exchange for upfront cash with secured overnight financing rate of 6%, and CRP, country risk premium of anywhere between 3 and 5%. Yep. You take money today and you pay over a period of years. How exactly do you plan to raise money to fund the budget in the future?
So,
okay, this year's budget
Mr.
has
Kelvin,
anywhere around
Mr.
18 trillion naira. 18 trillion naira in debt financing.
So these sales that are, because I want to bring in Nigerians and how it concerns Nigerians at the end of the day with all of this data and all of these numbers. So first question, as that forward sale, is it still continuing at the moment, or what is going on is payback for what was sold prior to this time? Maybe give us that answer. And then I would like you to speak to their specific reaction to say the story around the fact that this selling crude oil in Naira ending in March, whether they fully perform their obligation in doing that or not, is true or false. I want you to maybe respond to that as well.
Geoff, you know, the one for the Port Harcourt and Ilimi Refinery, I think 67,000 barrels per day, that is still on. I don't think that has been paid off. Project Gazelle, 164 million barrels of crude in exchange for $3.4 billion. Not sure they've wounded it off. You have Project Leopard coming up. Maybe in the future they might do another one called Gazelle 2, because there's deficits in the budget of about 18 trillion naira they have to finance in 2025. You know, on the issue you asked around if they fulfill their obligations, you know, in the month of February 2025, the schedule, the crude oil schedule shows that they said they were going to supply 2.5 million barrels for the month of February, which comes to about 83,333 barrels per day, you know, and then they were going to supply 1.9 million barrels for the month of March 2025, which comes to about 61,290 barrels per day. You know, that 61,290 is actually less than 10% of what Dangote needs to refine on a daily basis. You know, so they've not fulfilled their obligations in any way. You know, if, for example, you're saying that it ends in March, it's supposed to be 31st of March 2025 and not 10th of March 2025. How are you coming to say that this is for 6 months, considering that Dangote is buying crude in US dollar, most of it, and selling in Naira, and is applying a bridging allowance per liter to ensure there's uniformity of pricing across Nigeria?
So Mr. Kelvin, some specifics again. Just a moment.
To provide for the market.
Just a moment. Some specifics again. From what you know, what percentage of Dangote crude comes from NNPC and what comes from where it buys from outside the country? Just, I need that answer if you can.
Geoff, I'll tell you, anywhere around 91.5 to 92% of the crude that is used in Lagos today to refine PMS, that he uses to supply the markets in Nigeria and also export, comes from outside Nigeria. It comes from, he imports it. He has to source from outside this Naira-based crude swap. NNPC is not contributing up to 10% of what he's using today to refine. I can tell you that.
So this means that he's buying crude in dollars and selling in Naira. And selling the
product. He's buying crude in dollars and he's buying crude in dollars and selling in Naira, which invalidates the whole narrative that the federal government has, that the president issued a Naira-based crude swap and is providing Dangote with crude oil in Naira based on domestic crude supply obligation in sections 109 to stabilize the exchange rates. You know, you can see the impacts of not just the harmonized reporting on net open positions and the creation of like an FM market in foreign exchange by the CBN, but you can also see the impact, the supply, the consistency of supply, and the impact Dangote has had with reducing how much of petrol that is imported into Nigeria has had on the exchange rates, which is good. You know, so any attempt to scuttle that and ensure that more than 90%, which is what he's currently doing, of what he uses to refine is consistently brought in from the US, from Algeria, is brought in from maybe Angola and other parts of the world, it's going to have an adverse effect on the exchange rates. So, and I'll tell you this, Geoff. I'll tell you this, Geoff.
Okay. I just wanted to ask you
quickly. The Dangote Refinery.
Just hold your thoughts in just a moment, because I want Nigerians to be involved in this as much as possible. So now that he's getting over 90%, according to you, is crude from outside the country and maybe about 10% coming from NNPCL, for instance. How is he able to keep the price the way he keeps it and keeps competing? Is it because of his capacity, or it's just doing a fake? What exactly is playing out here? Because if it's really a market-driven economy, should we be worried that someday we may go back to where we are afraid of?
Geoff, the refinery is a brand new refinery, so it's taking advantage of economies of scale. There's what they call refiners call positive cracking margins, from the crack spread you apply. I can tell you that the refinery is emphasizing white transportation fuels, which means it's producing more premium motor spirits, the Jet A1, automotive gasoline oil, than is producing non-transportation fuels like carbon black, like polymers, all the derivatives from cracking residual fuel oil. So it's taking advantage of that economies of scale and the fact that it's hit 600,000. To be able to the refining business globally, it's a high turnover, low margin business. It's not a business where you make so significant profits. It's having to sacrifice its profits. Not like he's not making profit, but the margins are very thin, to ensure that he can provide to the market and demonstrate to Nigerians that against the popular narrative of him trying to become a monopolist in an extremely very well-regulated industry anywhere in the world, he's actually here to provide for Nigeria's energy security. So he's able to do this, reduce the price, because he has achieved a positive cracking margin from economies of scale.
I would like you to speak to us as well as to, we hear, because for the layman who has seen this backward integration from Dangote Refinery, now we're refining in country, Port Harcourt, whether it's full or partial, whatever it is, but refining going on there, Warri Refinery going on there. We do not expect importation of PMS, but we hear that this importation still happens. Is it against the PIA, or is part of what is allowed within the PIA, and why is that happening?
Well, Geoff, it's a very important question you ask, because, the evidence points to the contrary, that contrary to what NNPC has said and what the president even commemorated them, celebrated them, I'm not sure the president sent his own secret team to go and check if they actually are refining. NNPC has imported about 41.5% of about 4.4 billion liters of petrol between October 2024 to date. There's actually evidence, because if you check the shipping tally of the liquid bulk petroleum products that has come into Nigeria within the last 6 months, you will see that NNPC has actually landed 41.5% of 4.4 billion liters of petroleum products that are valued about 6 trillion naira. So now, when we look at the Petroleum Industry Act, what does it actually say? Sections 205 talks about deregulating the markets, and preventing transfer pricing. Sections 317, 7 to 11 of the PIA talks about the fact that when the regulator, which is NMDPRA, and this is the reason why I keep saying that the regulator is aloof, maybe because the midstream sector is just emerging, or it doesn't understand his brief, or it doesn't know his job. The management of NMDPR is aloof, considering that they also don't have a non-executive board that supervises and administers over them till today, established. They are supposed to withdraw import licenses when they see that the amount of petrol actually produced or refined in Nigeria is higher than the demand. And I'll tell you this, Nigeria does not consume more than up to 50 million liters of PMS. The government has not provided evidence to show that there's a correlation between what they were paying under recovery
Mr. Kelvin,
to match the bridging allowances that they were applying on the under recovery.
My apologies. You've raised another point again. What is the average consumption of PMS in Nigeria? How much does the NNPC provide? How much does the Dangote Refinery provide as well?
Geoff, so at 600,000, Dangote is, I think, is clocked about 40 million liters of PMS on a daily basis. Okay. Now, let's go back in time, Geoff. Look, Nigeria population grows at 3% per annum, okay? And in 2002, Nigeria was consuming 21 million liters of PMS. You had a compound average growth rate of between 7 and 9% in terms of PMS consumption on a daily basis. That number grew to about 29.3 million liters of PMS by 2010, 2011. It's not possible that if a population is growing at 30% per annum, okay, and you have a CAGR of about 7 to 9%, yeah, that all of a sudden consumption jumped from 29.3 million liters to 70 million liters and then down to 50 million liters. The government cannot provide evidence to suggest that. I'll tell you that our consumption of PMS is anywhere between 28 million and 32 million liters of PMS per day, which Dangote can achieve. So it's now resident on the government to call all the parties to the table and say, listen, we're going to transit all of you owners of bulk storage terminals, tank farms in Apapa, yeah, all of you owners of import licenses, into you go ahead and take products from Dangote and set up a transition period where you can set up a consortium to build your own refineries to compete with Dangote. That's the way to organize the industry, because you have to move from a point where Nigeria has historically been an exporter of crude oil to a point where you can beneficiate on your crude oil into Jet A1, diesel, AGO, polymers, and all of that, and export the derivative net of what your people consume. That's the way to grow your markets.
All right, Kelvin, in winding down, because I need to go back to Rivers State to conclude the conversation I started before I brought you in. Are you trying to paint the NNPCL as the enemy of progress in the industry? Because it looks like that, from your analysis, it shows that there's a lot of bottleneck that is coming from the NNPCL. And they've always pushed back to say they are doing their bit to make sure that the system is stabilized.
Look, Job, if they had invested that $2.4 billion that they use for turnaround maintenance for Port Harcourt and Warri, that is not working, it's offline, because they've not shown any evidence that they are recovering petroleum gases, which is a composite derivative of refining PMS in Port Harcourt and Warri. You know, if they had actually invested that money to buy more equity in Dangote Refinery, it would have been a better investment than what they've done, because you can't find any return from the government-owned refineries. Okay? So a situation where the NNPC owns 7.2% of the refinery, is a shareholder, is a member of the board, it has people resident there at refinery in Lekki, and you're doing everything you can to see that it doesn't succeed, then it doesn't show that you want it to succeed.
Okay, Kelvin Emmanuel, this is an ongoing conversation. Sometimes when we get to conversation between the NNPCL, Dangote Refinery, and literally all the things that go on in the oil sectors, it almost sounds like politics discussion. But we hope we can get out of the murky waters as soon as possible. As I said at the beginning, the most important thing for consumers like us is to see that the market is stabilized and we buy products at affordable rates. Kelvin Emmanuel, energy economist, thank you so much for coming in at short notice. I appreciate it. Thank you, sir.
Thank you for having me.